Hi everybody, welcome to a new RRG video, and I'm recording this on Tuesday the 12th of August, and the US market has just closed. In this video I want to take a look at current sector rotation, because it's starting to be a little bit of a one-way street, or maybe I should say a one sector rotation, and we need to investigate that. And if we have any time left, I will try to dive into the individual stocks in one particular sector. Let's get started right away with a look at the RRG for US sectors. So here's the weekly RRG for the sectors, and I'm going to immediately set the daily version next to it. And the way I do that is basically select the tab on your browser, and then on a Windows machine it's Control and then the left arrow, and you will see that it snaps to the left hand side. And I had already snapped the daily RRG to the right hand side. I like this setup because then I can have an RRG with the weekly rotation, so the longer term picture, and on the right hand side I have the daily RRG, which gives me a little bit more of a granular picture. There's one caveat that I have to tell you, because I had to shrink my browser, because if I set my browser to 100%, you will see that the screen size is too small. That was done because the new version of RRG needs a lot of real estate, lot of screen real estate, especially on phones. But this is a, how do you say that, unexpected side event, and we need to go and address that, and we will. But the workaround for now is to shrink your browser percentage. And again, on Windows you do that by pressing Control and then scroll down, and it sets your browser to 90%, and you go to 80 or 70 or whatever. Makes it smaller. If you just select the browser, you will see that it gets smaller and you get a lot more. You can't read it anymore, but so that's the trick to sort of work around that pixel setting. Anyway, so here's a weekly chart, and I am going to rank both of these charts on symbol, so I have them side by side, and I can then compare the two tails. So here is materials. Well, that's a pretty easy call. This is a sector that you don't want to be in right now, because the weekly is pushing further into the lagging quadrant, and on the daily it is inside lagging. It picked up for 2 days, but it's still a very low reading, both on the RS ratio scale as well as on the RS momentum scale. So materials, not a big fan. So here is communication services. That's a tricky one, because this weekly tail is moving into the lagging quadrant at a very short tail. Look at how close these nodes are. And then the daily is just jumping. Look at, this is also a five node tail, a 5 period tail. So the last 2 days, communication services is really jumping. It is one of the better sectors. It's still inside the top 5 of best sectors that I'm maintaining. So I'm going to give this the benefit of the doubt, especially because the daily is so good and it's so strong. And with this short tail, and we know that short tails are easier to turn around. So this combination for me still is in favor of communication services. Also, because this, if you look at this weekly RRG, then it's still the third sector based on the weekly RS ratio scale. All the others are on the left-hand side. So that's what I meant with a one sector rotation. We'll get to that in a minute, but it's well, technology. So let's go to financials. Here is, energy first. So here is energy. It's improving. It's inside lagging, but it's picking up a little bit of momentum. Still 1, 2, 3, 4 from the bottom, so not very strong. But then look at this daily tail here, and this is a rotation that happened inside weakening. Look at how fast that went. That's a pretty crazy move. So for energy, that's really one of the weaker sectors, especially because of this very long tail that we see on the daily RRG. Let's move on to financials. Now we go to financials. And here also, a weekly tail that is pushing further and deeper into the lagging quadrant, losing in terms of relative strength. And then on the daily, already inside lagging and losing relative momentum. Only that last blip here. So that was today's price, was just a little bit better. But overall, this is one of the weaker sectors. We go to industrials, and that's an interesting one because it is listed as one of the top 5. And the reason is because if you just look at, this is the weekly tail and this is the daily tail. Look at how much is on the left-hand side, both on the weekly and on the daily. So it's all relative. And even though these tails look horrible, I mean, industrials on the weekly RRG, losing relative momentum, losing relative strength at a negative RRG heading. The daily tail, same, losing relative strength, losing RS momentum at a negative heading, but still I gotta do a little peek, the second sector in the ranking. And that's because of the combination that I use there. So this is a very good example on how this is all relative. Despite these weak tails, this is still one of the better sectors, believe it or not. By the way, the portfolio that I'm maintaining is trying to use relative strength. So if this looks crap, that doesn't mean that you need to buy it because it's in the top 5. Just let me make that very clear. It's not pushing anything in terms of price. Then we get to technology, and technology is, it is the hero of the sectors. This weekly tail is gradually losing some relative momentum, but look at it. It's detached from all the others. It's way into the leading quadrant. There's plenty of room to make a complete rotation on the right-hand side. And if you look at the daily, then it just rotated back into leading, and the last 2 days are not fantastic, but that tail is shrinking. So again, also on the daily, the second highest ranking based on RS ratio. The combination makes technology the strongest sector at the moment. And it is basically carrying the market. The technology sector is driving the market higher. There's a lot of stuff going on here that is not good, but from a relative perspective, and it's carrying the market. It's the biggest sector. Technology is beating everything else. We go to consumer staples. The weekly, again, it's a low reading on the RS ratio, so not very good. It's still pushing lower on that scale and it's picking up a little bit of momentum, but not nearly enough. I can tell you that this move higher here is because of what you see on that daily tail, where you saw that improvement taking place. So here, since, what is this? This is July 7. You see the staples tail improving, although not much on the RS ratio scale, but definitely on the momentum scales, it's picking up. And that pickup of momentum is causing this move here. So I said July 7. Let's see, this is July 25. So this one here. So around this time, that tail started to improve, and that's caused by that strength on the daily RRG. With now the last 2 days rolling, wrong chart, rolling over. Again, here, I'm not sure whether that daily strength is enough to carry it over to the right-hand side into the leading quadrant. But still, it would need a lot of relative strength on the daily RRG to pull this tail all the way through improving and back into leading. So that's very unlikely to happen anytime soon. Then we go to real estate. Again, look at the combination of the two. So here is the weekly pushing further or lower, further into the lagging quadrant, lower on the RS ratio scale. And then here is the daily tail rapidly pushing into the lagging quadrant after a rotation through the improving quadrant. So it was going up and it rolled over without hitting leading. And we know that is one of the, in this case, weakest rotations. It's a new lower high in terms of relative strength. That's what's happened on the price chart or on the relative strength chart. Then we go to utilities, and that's also an interesting sector because that is also inside our top 5. And you see that on the weekly, it went through a negative rotation. It's still inside the lagging quadrant, but it's starting to pick up relative momentum for at least 3 to 4 weeks. And again, look at the position of utilities compared to all the others. And despite the fact that it is inside the lagging quadrant, it's still beating 1, 2, 3, 4, 5, 6, maybe even 7 sectors if you measure RS ratio. And here in the daily, it's the highest ranking sector. So this combination again, and you can imagine that that's pulling utilities to the right-hand side. That's why it's got its position in the top 5. And that's why this strength, if that can be maintained, will possibly help utilities to pull back up towards improving and then back into leading again. 2 more to go, starting with healthcare. So here is healthcare. Okay, weakest sector on the weekly RRG, lowest RS ratio reading, picked up a little bit of momentum but hasn't been able to get out of that lagging quadrant. And then look at the daily tail, the second lowest reading, and look at that tail, look at that rotation through improving, hooking back down, and that really long tail with the increasing length of the nodes supporting that weakness on the weekly. So healthcare, definitely one of the lower ranked sectors, and you can totally see that here on the RRG as well. And then we go to consumer discretionary, the final sector. And this is interesting because here you see the weekly tail inside improving, and you see it's a little bit, it's squiggly, it's jumping around here, but still inside improving and at a positive heading, just turned back to a positive heading. Now look at the daily, and there you see how that sector rotated just across the center of the chart, inside lagging, and then hooked back up and is now on the way back up. So from a potential point of view, this is probably the most interesting sector at least from a relative perspective, because the weekly RRG tail is inside improving. It's the only one inside improving, and it just turned back into a positive heading. And then on the daily RRG, you see that it is still inside lagging, but it's starting to pick up relative momentum, and it's going against, if you compare it to the other sectors inside the lagging quadrant, they were pretty much all showing long tails moving lower, and consumer discretionary is going against that tide. So for that reason, I think that consumer discretionary could be a sector to watch. It moved into the top 5 not too long ago, and the good news is that this is one of the heavyweight sectors together with technology. So this is a sector that could really help drive the market, and I'm a little bit biased, also help drive the performance of that top 5 portfolio, because it's lagging big time by the S&P. And that has all to do with the weighting scheme, because technology is inside the top 5, but at 20%, and the weight of the sector is 30%. So even with a position, we continue to be 10% underweight versus technology. And yes, I've had messages from people work with the equal weight sectors and do this and do that. Tried all that. Sometimes it's better, sometimes it's not. And I just stick with I started this project, so I'm going to finish. I'm not sure when it's finished, but I'm going to continue it to hopefully show and prove that trend following eventually leads to a better result. Although this is a bit painful what we see right now, but that's life, and I'm happy to swallow it.
If you're watching me talk about RRG on the Stockcharts TV channel and you cannot replicate it, that is because you are not a member yet. If you like what you see and you would like to have the same functionality as what I'm using in my videos, at least take a free trial, check out the functionalities of RRG, and after that, we'd love to see you as a subscriber to our service.
Let's do a quick round through the price charts of these sectors and see what's happening on the price scales and whether that's going to help the relative perspective. So let's again do this in an alphabetical order, starting with materials, XLB. The price chart's not too bad, holding up above the breakout level, putting in a new higher low. But look at the relative strength. This has tested its falling resistance line, is now breaking the previous low, and is basically reigniting that relative downtrend, confirming what we saw on the RRG. Now we have communication services, which is actually doing really well because this is a weekly bar chart and it's Tuesday now. So this is not the end of the week, but this looks promising. I mean, we still have to wait until the end of the week before we can make any decisions on this, but the push higher is very interesting. And what you see is that we left that rising channel in terms of relative strength. We're pulling back up. So these two are now getting really close to 100. And I'm going to say that if this increase in price continues, if that price strength continues, there's a pretty good chance that it will drag this relative strength line back up again and keep communication services in the top 5 and back into the leading quadrant. Here is energy. That is, again, this is definitely a weak chart. Look at how you could even draw a trend line here connecting these 3 highs. This one is about to be broken, but look at the relative trend. It is continuing to move lower. We just put in a new lower low, lower high and lower low. So energy definitely a sector to avoid for the time being. Here's financials. Kind of the same story. The price chart not even that bad, although it's got a lot of trouble really clearing that resistance area around $50. But what's really weak is the relative strength. Look at the relative strength. Broken that trend line, broken that out of that channel, and now, sinking like a stone. Seriously lower highs, lower lows, pulling the RRG lines clearly lower. Here's industrials, still a pretty good sector. The price chart is holding up. You see that this week we're at the high of the week, so that's initially a good sign. After the breakout, the relative strength line has done not much, and that's the reason why the momentum has dipped below 100 and it's now dragging the RS ratio line lower. So in order to keep this relative strength, well, there's a little bit more room, but I'd like to see this put in a new higher low somewhere here and then start to move higher. And in order to do that, we do need a continued strength in the price chart, but the option is definitely still there. And now we go to technology. I mean, it isn't gonna get much better than this. After the break, almost a straight line higher. This week already pushing to the high of the bar. Relative strength, almost one straight line up. We are getting into an area of resistance in terms of relative strength, so that could put a little pause on this move, but there is plenty of room for technology to maneuver and to dip and go back up and put in a new higher low, both in terms of price and in relative. So even when we will see some sort of a decline, I think technology will be the leading sector, at least for a few weeks to come. And then we go to consumer staples. This sector has a lot of trouble breaking that 8250 barrier between 82 and 8250. There's serious overhead resistance. It has resulted in weaker relative strength because the market's been moving higher. If the sector doesn't do anything, clearly your relative strength drops. And that's what we see here. And it's also taking those RRG lines lower. What you see now is that the relative strength is finding some support and it's starting to move sideways. And then you immediately see the RS momentum line to pick up. It's very early, but there's a little bit of an improvement here. But other than that, it's still a sector that is on the left-hand side inside the lagging quadrant on the weekly RRG. And then we go real estate. Real estate also moving sideways. You don't even have to know the ticker, but if you just know that the S&P has been moving higher and you see a chart like this, you immediately see that this has been an underperformer. I don't even need a relative strength line to gauge that. We do have it, so we look at it, but look at how this relative downtrend is still in play and actually moved lower again. So it's moved below this low. So that's confirming that relative downtrend and it's dragging those RRG lines lower. And then we go to utilities. That's an interesting one because this breakout is serious. And I think that the follow through is serious. And I had a few people responding under the previous video when I said, I can't really position utilities because, it's technology doing well. And now consumer discretionary is starting to do well. That's a growth oriented market. And you wouldn't expect a defensive sector like utilities to be so strong. And then people said, yeah, but it's all AI and it's all the energy. And, so probably true. But for me, what it means is that we may have to sort of review what we consider to be defensive and offensive sectors. Maybe utilities is not such a defensive sector anymore. Or maybe it's both, because even when the markets go down, people still want to use electricity. It's just that the demand for electricity has gone through the roof with all this AI. So again, I'm still a bit on the edge. I totally get it why utilities are now so popular and while they're driving up because all these power companies make a lot of money because of all the demand on power. But in terms of framing where utilities should be positioned in terms of offense and defense, I think that needs a review. So any good ideas, just drop a note in the comments and we'll talk about it. And then we've got healthcare. Again, you don't need to know what sector this is. Market's been moving up. This one is moving down, underperforming, clear as day. Look at how this relative strength line broke support and moved lower, and it's dragging the RRG lines lower. The decline in momentum. So what you see here, this pickup doesn't mean that it has positive momentum. It has less negative momentum. And what that means is that this drop here was really fast, and this is not so fast. And that's what you see in that momentum line, that RS momentum line starting to pick up. It looks as if we're now breaking out of this triangle. Depends a little bit on how you draw that trend line. So I'm always a bit careful with calling, patterns like as if they are a guarantee, because they're not. But, this looks like a triangle-ish pattern that's broken to the downside. There's still a little bit of leeway. So if you really want to take the extreme here, that's 126.74. If we break that, then that's a new sell signal for the healthcare sector in terms of price. But the upside is difficult. It's blocked by a lot of stuff. And that's not going to help relative strength improve. And then finally, we got consumer discretionary. And again, I said this is possibly from a potential, what is potentially coming in terms of price and relative strength, maybe the most interesting sector. Look at this. We rallied, we had trouble, and we're now pushing against this resistance area here, 227. Look at the relative strength, which is bottoming out at the same level as the previous low, and it's slowly starting to drag those RRG lines higher. So this is gonna, remember where consumer discretionary was, on just inside the improving quadrant, and just to the left with a short tail on a positive heading. If this continues and we can push this higher, it will undoubtedly start to bring this relative strength line higher. And then when we get consumer discretionary join the technology sector and maybe one or two more growth oriented sectors on the right hand side of the RRG graph, that's when a real relative trend could start to emerge. If I just do a little bit of pattern fantasize, let's call it pattern fantasizing. How about looking at this here as an inverted head and shoulders pattern? So we got the left shoulder here, we got this big dip to the head lower, and then we got a new right shoulder, and we're about to break the neckline. And maybe you think like, hey, Julius, but an inverse head and shoulder is a trend ending characteristic. It should be at the end of a downtrend. Absolutely true. But there is a variant of head and shoulders, and it's a head and shoulders continuation pattern, and it's happening in a big trend. And if you bring it from here and you say this is a really big trend, again, there's no guarantee here, but it's got the characteristics. It's got the neckline slightly dropping. It's got the left shoulder, the right shoulder. It's got the deep dip into the head. I mean, if it happens, if this is really going to work out, that means that 175 to let's say 225, that's $50 on top of 225. That's 275 for XLY. That means something. That is a return. That will bring consumer discretionary back to the surface, back on the radar of investors. It'll pull the relative strength line higher and it will push that weekly tail into the leading quadrant. Okay, we're almost at the 30-minute mark, which I believe is kind of the maximum attention span of people watching videos on YouTube. Maybe it's even longer. But I wanted to share with you one more thing, and this is the RRG of the constituents of the consumer discretionary sector, and try to see if I can find interesting tails with accompanying price charts. I probably won't be able to do all of them, but I'll show you in a speed up version how I select those tails and then look at one or two of the individual price charts to say, okay, these are potential stocks to pick up inside the consumer discretionary sector because they may have enough new potential. Let's go. And then we have three individual stocks, which I think are worth looking at. You saw me clearing out, basically passing over all the individual tails. What you did not see is that I also checked the price charts, but these three came out as potentially interesting. And let's have a look at those individual charts. Starting with DHI, Dr. Horton's. And I'm going to blow this up for you. So here we are. And massive downtrend, big transition, big rounding bottom, and I'm breaking overhead resistance, still holding there. And that's pulling that relative strength line higher. So this is definitely a stock on my list. It's breaking out in terms of price. The relative trend has turned around and is going back up again. It's traveling at a positive heading. So that is one to keep an eye on. The second one is Mohawk, and that is MHK. So here's MHK, and what you see here is an even stronger break than with DHI. Again, it's Tuesday, so it's a little early in the week, but this is a nice bar so far, and you see how the relative trend is starting to pick up again. RRG lines above 100, momentum starting to pick up again, positive heading. With this break, I like Mohawk to keep an eye on going forward. And then the third one is Lennar. Also a big downtrend, rounding bottom, getting out of that range, breaking higher with relative strength supporting it. And I think we're talking about stocks that have new potential. And you can see that this is not something that you're buying at the peak of the market. And let me just do a very quick comparison. So if I bring this RRG back with everything, and you would look, for example, at, I don't know, TPR, for example, that's probably a good example. Look at TPR, look at the price chart of TPR, Tapestry. Look at that. The question is, how much more upside is left here? Here you're buying at least way into the uptrend, whereas the three that I just showed you, you're buying at something that's coming out of a dip. I like that. It looks good for risk reward potential. Anyway, a little bit longer than I thought. Thank you for watching. I hope you enjoyed it. And again, please leave your comments under the video and I'll respond there and we'll have a good discussion. Looking forward to seeing you again at a new RRG video soon here on Stockcharts Television. Thanks for watching.